Welcome to the Pump and Dump channel for another weekly update, this time talking again about the energy sector, stocks in the energy sector. I'm not going to talk about negative oil prices. I think there's been enough videos on that, and quite frankly quite a few that I looked at proved that the person talking about it did not have any idea what they were talking about, and they didn't know the real facts. They just kind of were parroting the headline and acting as if they are, as always, the source of all wisdom that emanates from them, and they have this attitude of always pretending to know it all, and such people are just oh well, I mean, it gets the clickbait and it gets the ad revenue, so I guess that's the business model. Anyway, so looking at CNX Resources first. Earnings on Monday, we will see what comes. I have no idea what it will look like. I think we have to be aware that we've come from $4 to $14 on the stock within a month, a huge move. And CNX, of course, it is a hedge producer for the most part. 94% of the volumes, if I remember correctly, are hedged for this year, so they'll be able to deliver into those contracts. Sales contracts should be assured. The question is on the production side. I think it'd be interesting to see if instead of producing natural gas they just buy it in the spot market and then sell into their contracts, because from my calculations their cash cost plus their replacement cost is about 150, and the natural gas price traded around 150 during the last 2 months. A few times I saw it touch it, so I would assume that that would be a possibility that they could have done that, and it would be interesting to see if they did do that. Of course, there's some operational limits whereby they can't just close down the well and reopen it willy-nilly. They kind of have to consider that once you shut down the well, it's kind of expensive to get it going again, from what I know. So we'll see. I guess in terms of pricing, I don't know. Maybe it can drop on the worst case scenario to 930. Normal scenario maybe drops to 1050. Or rises to $12, $13 depending on what the natural gas price does going forward. With the current 1150, it seems to be fairly priced in my opinion, but what's the point of buying something that's fairly priced? I guess you want something at a discount, so we'll see what happens going into the earnings. I mean, longer term, I do think the thesis holds that natural gas price has to rise. The problem, of course, with having a good hedge book is that if the natural gas price does rise and you're selling into hedges and you're realizing losses on your hedges whilst gaining on your operational revenue, so there's going to be some question as to how that's going to look in the future. The other question, I guess, to look for is what have they done with their hedge book going out into the future. They were adding into 2024, 2025 and locking in prices for those periods, and it's going to be interesting to see whether they continue to do that or not. I think given the macro environment with oil price cratering and natural gas price still relatively low, it's very obvious to assume that the likelihood of supply destruction occurring over the next year or so is going to lead to less supply of natural gas, especially the associated natural gas production from the oil and gas producers, the shale oil and gas producers in particular, that are not going to make it. I've looked at a few more companies, so I can't just limit my complaints to Antero Resources and SM Energy and Gulfport Energy and names like that, but also I've looked at Continental Resources, which is not good. Murphy Oil is not good. And yeah, we will see what happens, of course, with the situation. Of course, Whiting Petroleum already went bankrupt, so they're continuing to produce, so that's not going to impact the supply side in the near term, because just because they're bankrupt doesn't mean they not continue to produce. It just means that the debt holders take over, the equity holders get wiped out, and yeah, anyway, we'll see what happens there, but that's kind of what to look for. I think the thesis, as mentioned, that the natural gas price will rise in response to supply destruction unless we shift to more solar energy in the US, and we see that there is an increase in solar panel usage and collecting energy with solar panels. Maybe the sun can shine a bit bright and give us more energy, I don't know, but we will see. I guess that's gonna cover it for CNX. Next, Diamondback Energy. I talked about these last week. I mentioned I bought a position at 32 to 28, and during the week, after selling some CNX resources from, well, I've been selling it basically from 9 all the way up to 1380. I sold, and I took some of that money, bought some Diamondback shares at some additional ones at $30 and change, and then I pinged those off at 33.66 and wish I had held on to them a day longer, but hey, it's the way it goes. I'm still exposed with my position. I bought for an average of $30 and change. We'll see where this goes. I think longer term $60 is possible. It was in a year, and within 2 to 3 years I think that if the oil price normalizes, we could see $100 to $150. That's kind of what I'm thinking. Now, next one on the list is Noble Energy. I looked at them on Thursday evening. I should have looked at them before, but I had a list of companies I wanted to look at, in particular Continental Resources, Apache and Devon Energy. I looked at those three, didn't like them at all, and I had Noble Energy still on the list. I also looked at Murphy Oil today, and if I had looked at Noble Energy earlier, I would have bought it much cheaper. As you can see on the 5-day chart, it's been between $7 and $6.28, let's say. I could have got it much cheaper, but I bought it today at the open, 8.13. I got some, and then I bought some more at 7.86. Tried to buy some at 7.62, but as you can see, I didn't get filled on that one, and that was a bit frustrating and annoying because I got within a cent of the bottom and then didn't get filled. So the average cost of the position is a bit more higher than I wanted it to be. So it's about just under $8 a share. Small position. I'm thinking maybe it pulls back and then I buy some more, but maybe it doesn't. So it's better to have some if you think it's going to go up than not to have any, even if it has been at 273. So we'll see where this goes. I think longer term I could see $20 again. I think from this current $8 to 10 should be very possible, and 15, 16 should be also possible. But 22 to 35 I think could be possible if oil prices normalize and we see some supply destruction and demand, of course, picking up after coronavirus is out of the news feed and nobody's worrying about it anymore. We'll see. Yeah, I guess apart from that, there's not much to say for the weekly update. As usual, I guess, questions, comments and opinions in the comment section. If you like the content, don't forget to subscribe and have a good day.